Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update or weekly stock market update. We should have some fireworks coming this week. Let's take a look at the expected move for the SPX. Now, I have not changed it on the screen yet, but we can go to the option chain, pull it up. So this week, the we're looking at Friday's expiration on the XPX is showing 130. I believe last week it was like what 147. 130 is still um a large move that's being expected, and we got all of that. So I guess it's a good thing that I left it up. So this is from last week, right? I had 147. Now look at what the market did on Friday. Do you see how on Friday? So we got this would have been Monday. Monday we had this large move, came down outside of the expected move. Tuesday, we hung around right here. Wednesday, we closed right here. Went down on Thursday. And then on Friday, look at this move. Came all the way back in. So Friday, the market actually closed out the week inside of the expected move. Now, what is that? So basically, that goes to say that everything that happened last week was expected. Basically, it was priced in. The option market did its job. Um, they priced in the movement in the option market perfectly. So what that means is, let's say you would have came out here, if you would have sold this and then sold this, and let's just say you would have held it all week. You could have held it to expiration last week. You'd have held it to expiration. You would have got to keep whatever this is. Right now it's showing for the week upcoming is $3,775. Excuse me. So you would have been able to keep that. That the market finished inside of this area right here. So what that's showing is next week we got 130. So we can actually look. That doesn't mean that hey, we're gonna get that again, but it just goes to show that even though you could be looking at the news and it could look like all HE double hockey sticks is breaking loose, right? And you'd be like, man, the market's moving crazy. Nah, the market didn't move too crazy. The market did it did exactly what the option market said it was gonna do. Stay within this range. So that's one of the reasons why I do that. Now, this week, what I would end up doing is just moving. I would be moving this, somewhere right around in here, moving this one down some. And I'll probably do that after the video. But you do know that it's 130. So you just have to plan, your trading accordingly, right? Now the SPX, the reason why I do that and kind of use that as uh a rubric for the whole market is because it has the 500, supposedly the 500 top stocks. So many traders will use the S&P 500 as a measurement, for the whole market. Now let's go and look. So during this downturn right here, I'm kind of mad at myself because I haven't made money like I should coming down through here. I've actually given back most of the gains on the year that I had before the downturn. So it has hit me too in this account. Um, so what I got back to this week was I reopened the position in the notes. So I'm back trading the bonds. Um, I have a put spread on in the notes. If we come look at it, and I'll show you where I'm at. I'm right here. Sold the 109 and a half. Bought the 109. So I'm right here, somewhere down in here with my put spread. Because I believe that I've been saying it, all year basically, that I believe that the bond market will continue to go higher. We could get a little bit of pullback into here, but I think ultimately that bonds will continue to go up. This is the 10-year note. So if we come look at ZB, which is the 30-year, and we are looking at it, I think it looks just like the 10-year. I think we'll continue to get it to go up. And that's pretty much, the for me, the long-term trade. Now I also did get long the euro. Getting long the euro will be just like getting short the dollar. You really can't short the dollar, but buying the euro against the dollar is a way of doing that. So let's I'll pull up my euro trade. Now I traded this outright. I'm in this currently. So basically I just own, I don't know why it looked like that. So it won't let me go out far with it. I'm trying to pull it out so you guys zoom out, but here you can see where I'm at. I actually got in this late. I wouldn't advise anybody to get in after this move. I just think that it's going to continue to go higher. Let's pull up the forward slash 6E. So that this is the micro, the smaller version, and here's the larger here's the full. So you can see it right here. So I got the beginning of the move here. I actually think it's going to go all the way up here, to be honest with you. I think it's just going to keep going up. So what I did was instead of trading this, so if we come to let's go here. Let's go to the active tab. You can see I have one here. Now it's not even showing me what is margin me. If I were to, let's see if I can, I'm gonna swap this out and go to the full futures. Let's do it like that. Now, if I were to come and try to trade forward slash 6E, let's just say I wanted to buy, hit the buy right there. See the buying power be $2,800. If you can't see it, if you guys looking at the phone, over here where it says BP plus or minus $2,875. That's how much it would margin me. Now, by trading the micro, I'm like a multiple of 10, like down from that. So basically, my margin is $287 by buying the micro. Just a way of trading smaller and not having to put too large of a position on that'll tie up the account. But they're basically the same. The chart is the same. And so I'm just betting on. Now, if you want to hear I could show you. There's a reason why how I found this, and with my technical analysis and stuff like that. I go over that more for the for the members. So if you join as a member, I will go directly into that after this video showing how I found that trade and how I got this extension level. I'll do a video separate for that. And I also have another stock that I like, and I'll talk about that in the members tab as well. So basically for this week, guys, I would just be careful. We're gonna see a lot of movements going back and forth. You're gonna see a large down move, probably large up move. And we got a lot of news this week. So that's gonna help drive that. Monday, no scheduled reports. On Tuesday, we got a JOLTS job openings. With that'll move the market. Wednesday at 8:30, you got a core inflation rate. You got some more inflation stuff on Wednesday. And then I think we got a interest rate decision this week. We should. This is last week. I'm sorry. Gotta go week. I'm sorry. Here we go, guys. Scratch all that. March 17th on Monday, retail sales. Tuesday, they got some housing numbers. None of this stuff will move the market, but probably not as much as on Wednesday. We got a Fed interest rate decision. So you're gonna get a Fed interest rate. We got the federal what's his name, Jerome Powell. He'll be speaking, and then you'll probably get your existing home sales on Thursday. Now, interest rates. Let's talk interest rates. With me thinking that the bond market is going to continue to go higher, this is my play. If interest rates are going to come down, which is what I predict, then the bonds should continue to go higher. So that's why I am trading. I'm literally trading what I think. We don't get that a whole lot. When you watch TV, these guys are saying a whole bunch of stuff. They're saying stuff and they're putting it out to people, but you don't know what they're trading. I'm telling you that I think interest rates will come down. I've been saying it all year. It's part of the president's plan, whether you agree with it or not. Part of the president's plan to basically get the market back where it should be and what he thinks, make America great again. He needs interest rates to come down. I was listening to Ray Dalio in an interview, and he said interest rates should be down around 100 basis points to help the president do what he needs to do. I do think that these talking points are being pushed around. And so if they're gonna cut interest rates, and a lot of people think that the Fed is independent, you can believe what you want to believe. I don't believe the Fed is independent. I believe that the president can lean on the Federal Reserve, and he will lean on them to get those interest rates down. And if interest rates are going to come down, bonds will go higher. That is your play, at least in my opinion. Now, let's go and look at it's one other thing I want to show you guys. Let's go to the FOMC. I don't want it here. I'm going to drop this down. Give me just a second. I want to show you something else. Let's pull up the FOMC Fed Watch tool, and then we're going to see what the rate probability is for this upcoming week. We're going to pull it over here so you guys can see. See they count down 3 days, 3 hours. Now, current rate is 425, 450. They're saying there's a 98% chance that nothing will happen. So basically, they're saying that it's going to stay the same um, on these are the probabilities that they're not going to do anything this upcoming Wednesday. Let's go out to May. Now, if we go to May, see how the probabilities are changing. We got 71%, or you can round that, say 72. And then right here, you got 28. That's a 25 basis point cut in May. Let's go to June 18th. Now look. Now if we go to July, let's just go to September. Now if we go to September, look where we at, guys. Right around, that's about 50 basis points right there. And if we go to October, you can see it's kind of equal. So we could be somewhere. I expect all of this to change. But you do see over here where it says probabilities. In October, you see how it says no change, and then you says ease 95.8%. So this Fed Watch tool is telling us that there's a good probability that the Federal Reserve they're going to ease. Basically, when you hear ease, that's just cutting interest rates. The interest rates will continue to cut down. Will continue to go down. So if we're going to get that, then being a trader, you just want to stay long bonds. The only thing about bonds, they're very expensive to trade outright. Probably if I could afford to, I would just own the 30 year. Let's see I'll show you what that would look like. Basically, what that would be if I came over here, let's see, /GB. That's it right here. So if I came over here and I just wanted to get long, right? It's actually not that bad. It's only about $4,000. So it would margin me $4,000 to get long this 30 year and just hold it. But the thing is, more than likely, I'd want to hold this all year, like catch it on a pullback and just get in it and just stay in it. Every time you grab a few ticks, get out, then let it come back down and keep buying it. One way as a retail trader that you can trade this is to use the TLT. Here's the TLT. I do own this in another account. I just own the shares outright because the TLT pays a monthly dividend. So that's one of the reasons why I do that. And it doesn't move a whole lot. So like putting your money in a bond, can kind of get you out of the whipping around of the stock market. So basically, for the past year, you got a high of what it would call that 101.64 and a low of 85. That's only like 16 bucks from here to here. And see you back here. So that's a way of like keeping your money from bouncing around and then just drawing dividends, as opposed to the SPY is down from the highs from here, 613 all the way down to what, 550. That's like 63 bucks. That's a nice little haircut in a span of, shoot, not even a month. That's February 19th. This is March 14th on this candle right here. That's so it did that in a month. With that being said, guys, hopefully you got something out of this video. I'll get ready to do the members video, and I'll post that for all members, and I'll show you guys another trade that I like currently, and then I'm gonna go into how I determine levels. We'll talk about that in the next video for the members. So go ahead and sign up, become a member. Then you can get that extra added content that I throw in. That being said, guys, I'm out. Peace.